How much of your account should you risk? This is also a very important topic when it comes to risk management. Of course, like many things in the world of financial markets, it's a trade-off. So you can have too little risk, maybe too much risk, and the right amount of risk. I don't know if there's even something called too little risk. Of course, if there is no risk at all, that would be a fantastic world to trade. But that's not the world we live in. We trade with risk. We get in the market and we know that we can make money on this trade and can lose money on this trade. This is risk. So there's nothing called too little risk, but there is too little return. You don't want to get in with very limited risk that is limiting your ability to make money. I want to take some kind of risk in order to make money. I cannot take this amount of risk and expect this amount of return. So that's why don't take too little risk. My account is $5,000, okay? And I'm taking this trade. My lot size is very small and my stop is very limited. If I lose, I will lose $15. Okay, that's great. That's the worst thing that can happen to you is losing $15. But what about the profit that you can make on this trade? Is it $15? Is it $50? What kind of return are you looking for? If you see that this return is not suitable for your investment ambitions, for your investment needs, let me say, and it does not give you the reason to trade and to watch the market and to give it your full 100%, then you should probably increase the risk. The risk-reward unbreakable relationship. You cannot, as I just said, you cannot take extremely little risk and expect a lot of return. It does not happen like this in the financial markets. So if you have ambition, you have to take risk. But you also have to control risk, that it's not too much. What is too much risk? Too much risk is the kind of risk that can cause you to lose a large percentage of your account or even your whole account. Some people do take that risk every day. They don't care. Okay, my account is $5,000. Give me 2 lots buy. What? What? What are you doing? And sadly, there are many brokers who offer extreme and crazy leverage options. And sadly, people come into this market without understanding what kind of risk they are dealing with. They love seeing 500 times leverage. I would never ever use that. And I would never ever recommend you to use that. No, you have to keep your risk limited. You have to keep it under control. You know that you are taking too much risk when one loss can cause you to lose 30 or 40% of your account. That is crazy. If I lose 40% of my account in one trade, how can I recover from that? First of all, emotionally. How would you feel about that? You lost 40% of your account and you cannot move forward. You start thinking, what should I do right now? All these kinds of emotions and frustration, and they definitely will force you to take more risk in order to compensate for that loss, and taking much risk will derail your account into hell. So you should ask yourself, what will be the account size after a number of losses? Let's say, okay, this is my trading size. I have a $5,000 account, for example. I will get in at 0.25 lot per trade, for example. These are not recommended numbers. Recommended numbers need to be calculated in a way that reflects risk and reward at the same time. But we are just saying these numbers for the sake of creating a conversation. So if I use this lot size with this account size, and I use stops of 60 pips, for example, what will be my account balance after 8 consecutive losses? You need to calculate that number. Nobody gives any attention to that number. You know, people trade. I ask this question. Okay, this is your lot size. Okay, and that's your usual stop. Okay, what account balance will you have if the market was so cruel to you that it gave you 8 stops or 9 stops or 9 or 10 stops in a row? And it happens even to the best people in the world. They can lose 7, 8, and 9 times in a row. So when I ask this question to traders, they just stand there looking in the sky. You know, if you don't know what will happen to your account after such a losing streak, I suggest that you calculate what kind of account you will have after that. And if you see that your account is ruined because of 8 bad trades or 9 bad trades, then you are taking too much risk and you should lower either the lot size or the stop or both. Okay, either the lot size, 0.25 lot, I can lower that to 0.15 lot. I'm taking 60 pips stops, I will lower that to 45 stops. Although, to tell the truth, I don't recommend using exact numbers for stops all the time. You know, it should be built on the chart and what the chart is telling you, not an exact number. So always calculate this number. Always ask yourself, what will happen to my account after this number of losses in a row? And there's one thing that a lot of traders don't like to think about. It's a very simple question, really. Can you lose your whole account in a month? Of course you can. In a week? Of course you can. In a day? Of course you can. In an hour? Of course you can. In a single trade? Of course you can. But what kind of people get these results? They are the traders who take too much risk. Always calculate your risk and don't let one trade or a small number of bad trades ruin a great account and a great adventure that should last for years and years. You don't want your account down 40% in a week. That will leave you devastated and will take out all the energy that you have. But if you lose 5%, for example, 3%, on a trade, that's okay. Whoa, I lost 5%, I lost 6% this week. What's the big deal? No problem. We can always come back from such minor losses. But you cannot even begin to understand what kind of emotional baggage a loss of 40 or 50% will leave on you. So always calculate this exact number. I suggest that you should use 10 losses in a row with the account size, with the lot size that you are using currently, and see what kind of account will you be having. If it's 50% of what you started with, 40% of what you started with, then you are taking too much risk. If it's 15, 20%, maybe 25% of what you started with after 10 consecutive losses, it's still reasonable. But I prefer this number to be below 20%. If it's above 40%, then you need to reconsider your risk. Okay, what is the right amount of risk? A variation of what we just said is what is called a worst case scenario. When you are opening 2 positions or 3 positions at the same time, some people open 4 positions at the same time, and they place stops on all of them. I say, I'm fine, don't worry about me, I have my stops. Okay, you have your stops on 4 or 5 trades. What if all of these stops were hit? This is what I call the worst case scenario. Calculate what kind of balance your account will turn into after all the open positions hit their stops. If the loss is very painful, you need to change everything. You need to change the lot size, you need to change the number of open positions at the same time, and even the stop itself. You can also think about the period you need or the time you need to recover losses of 10 trades or 5 trades. If these trades in total take away 15% of your account, you can regain that in a short while. But if these trades take 50% of your account, then of course you will need much longer period of time in order to be able to stand on your feet again. You should also ask yourself how much return a month or a year is good enough for me. For some people, making $100 a week is great, and they will be very happy making that kind of money trading. To some people, making $1,000 a week is not good enough. So this will have to contribute into your risk assessment. And you must make these calculations using reasonable accuracy rate and reasonable risk-reward ratio. Accuracy rate, or win rate, as a lot of people call it, is the rate at which you are achieving profitable trades. If you trade 100 times and you make money in 70 of them, then your accuracy rate is 70%. Okay, so in order to really calculate these numbers and use them very well to your well-being or to your account well-being, you must use reasonable numbers. You cannot expect to reach 90%, for example. Say, don't worry about me. Okay, I lost 30% here, 40%, but in the next 10 trades, I will make money on 9 of them and I will be fine. You cannot expect that to happen unless you are a super trader. Most traders are they have an accuracy rate maybe 60%, 65%. So keep it around these numbers. Don't be arrogant again. We're coming back to arrogance. And of course, you should also use the right risk-reward ratio. Risk-reward ratio, which we will talk about during this hour as well, will be or should be 1-to-1, 1-to-2. You cannot say, okay, I'll get in these trades and I expect the winners to make me 200 pips and the losers to lose 25 pips. That's not how you calculate risk. Okay, one very important table that I have made for you shows just how much risk has an effect on the balance after a series of losses. Here I took an account of $1,000 and I assumed the stop to be a percentage of the account size. In the first column, the percentage is 20%. This means that I place my stop at 20% of my account. So if my account is 1,000, my first stop will be 200, and that will leave me with 800. Then 20% of 800 is $160, and that will leave me with 640, and so on. Second column, 10%, 5%, 3%, 2%, 1%. Look here and check what kind of balance you will have after 10 losses. 10 losses is something that does not happen that often, but it does happen. It does happen, even to the best people. There are good times and bad, and these are the financial markets. You have to live with that. So you have to survive through the bad and flourish through the good, and that's how you make money. When times are good, you're making a huge amount of money. When times are bad, you're losing a limited amount of money, and that's how the best do it. Okay, so in the case of 20%, it will only need 10 trades to take this account to $107. That's a devastating loss. Unbelievable. If we cut this to 10%, we have a little bit of equity left there, around 350. But if we lower this below the 10%, and single digit stops are the best, of course, at 5%, it will take me 10 losses in a row and I will still have 60% of my account, losing 40% during this very bad streak. If I lower this to 3%, even 10 losses in a row cannot make me lose more than a quarter of my account, which is very good. 2% is the one that a lot of people talk about. Never risk more than 2% in one trade. Of course, there are no hard rules regarding these things. That's an advice, and I think that's a good advice, but it's not, written in stone. So you can go for 3%, 2.5%, 1.5%. It's up to you. But the important thing is to keep this low. You cannot use these numbers. This is not trading. This is gambling or something like that. So when you lower your stop to 2%, even 10 trades, 10 bad trades in a row cannot make you lose 20% of your account. And at 1%, even 10 horrible trades cannot make you lose even 10% of your account. At the bottom, I have calculated for you how many trades do you need to, how many bad trades or stops do you need to reach half the equity of your initial balance. Okay, if you're using a 20% stop, you only need three. Look at this. After 3 trades, it's 500, almost 500, almost half. Okay, at 10%, you need 7. At 7, you drop below the 50% level of your initial equity. And at the 5%, you need 14. You cannot see it here because it's way below. At the 3%, you need 23. At the 2%, you need 36 consecutive losses. And what are the odds of that happening? They are very, very low. You need 36 consecutive losses in order for your account to drop to its half, to the half of starting balance. And at 1%, 70 trades. 70 trades. Okay, so as I told you, the 2% is highly advised by a lot of professionals. A lot of people think that this is the best thing to do, while at the same time you can start seeing gains in your account. 1% is very good, of course, from the risk perspective, but it also limits your ability to make money. So I would recommend something here between 2 and 3% per trade. Always keep this in front of your eyes. I don't want to lose more than 2% or 3% on any trade. It doesn't matter what you think the market will do. It doesn't matter if you think it will come back. This phrase is the single most devastating thing to say when you are in a losing position. No other phrase made people lose more money than this one. So if you think it comes back, okay, no problem. Just place your stop, reasonable stop, and if it comes back, that's great.